Hi, I'm Roger Montgomery from Montgomery Investment Management, and welcome to this week's Video Insight. Well, something peculiar has been going on in the markets now for some time. The S&P 500 continues to break records, and so does the US bond market, meaning interest rates are declining. Now, what's peculiar about this? Well, generally, a rising stock market suggests that the economy is going well or going to do well, whereas a rising bond market, meaning interest rates are declining, suggests the economy is going poorly because interest rates need to be cut. So which one is it? Well, unfortunately, we won't know for some time. You see, what's broken is the price signalling and risk signalling that's usually provided by the bond market. Because governments have been buying back bonds, or central banks have been buying back government bonds for many years now, to the extent that 30% of all global bonds are now showing negative yields, it means that the usual price and risk signalling of the bond market is no longer working. Take Italy, for example. In Italy, $400 billion of loans offered by banks are non-performing. That's 25% of that country's GDP. At any other time, this would suggest a bailout of the banking sector would be necessary. And yet, the Italian government can now borrow money at lower rates than what they could when the economy was going well. It doesn't make any sense. It suggests that we shouldn't be looking to the bond market as an indication of whether or not, for example, inflation is emerging. It may be that we're not seeing the price of a bar of chocolate increase, but what we do know is happening around the world is that the size of the chocolate bar packaging is declining and the price has stayed the same. This is inflation. It's not price inflation, it's size deflation. It's just another form of increasing prices. Unfortunately, the bond market's rally is hiding these facts. It suggests investors in equities need to be on their guard. It's a reason why in the Montgomery Fund and the Montgomery Private Fund we have over 20% cash, and we're looking forward to the day that we can buy high quality businesses that are growing strongly at discounts to their intrinsic value. I don't know when that will be, but it's important to know that we can still outperform the market while maintaining some of our funds in the safety of cash and using that cash as an option over lower prices. An option that has no time to expiry and no strike price. It's something you might want to think about as well. Look forward to seeing you next week, and please continue to follow us on Facebook and Twitter.